Is the market update. I'm your host, Bill Noble. More specifically, this is the halftime report of the crash of 2023. Where are we in the process? Stocks, bonds, crypto. How are they connected? What you should do next with a particular emphasis on certain trading strategies and ideas for how this is going to unfold. Obviously, there will be more market updates during October, but I want to start introducing a couple ideas on, on how to trade the crash. Because as people probably know by now, especially looking at bond markets, this is a crash. I will help you. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live, and feel free to hit the like button early and often. It helps the channel and it helps spread the stream around. Okay, Chris Cotta says, crash, what I miss. Love it. Okay. Actually, in some ways, man, the comprehensive crash hasn't started yet. So let's welcome who's on the show, right? Katzman, welcome. Dead Fred. Let's get positive bounces on every chart, right? Let's. Israel, what's up? What's up? Malik, Aaron S., Willimeter, right? Lawn Shark is here. Sarah, Chris again. Kim Craig, give us the goods. Probably working the night shift there. Duilo, forget about it. Andre, Megan in the house. Richard Barry. Let's go. Okay, let's get to the news. Even though the news is that the market is getting nuked. All right, let's begin with some of the things from the place where I work at, Emerging Asset Group, which has just essentially relaunched one of its primary tokens. The symbol is EAG. We're going to talk about it. Now, one of the things about EAG is that we have a Twitter space. We've had a Twitter space, on Mondays for, a year. And one of the things we've talked about in that Twitter space frequently, if not every time, was about the United States being ungovernable. This is the term that I've used. The United States, because of the political division, is ungovernable. And the theme from those Twitter spaces, as everybody on the stream knows, was that this was eventually going to have massive impact on financial markets. Okay. And then the real circus started, right? Like, for example, the Speaker of the House makes a deal to get a budget done. A deal is a deal. Okay. 8 members of his party get together with all the members of the other party, and they humiliate the guy and make him the first guy thrown out of office. The first Speaker of the House to literally get booted during his term. Okay, probably humiliating not only Congress, but humiliating the Speaker's party. Because a lot of people who voted to not throw him out are now turning around and asking for a former president to become Speaker of the House, because you do not need to be a member of Congress to be Speaker of the House. This while they have to get another budget deal done in November. Meanwhile, you have, and we'll talk about this, you've got the administration panicking, because now they don't have, the deep state doesn't have a blank check to do whatever they want regarding the war in Ukraine. And undoubtedly, Vladimir Putin is watching. All right. So are holders of US Treasuries. This is one of the things that we've talked about. And this morning, we have the governor of California has just signed a bill banning hand counting ballots in most elections. Why? In other words, there's already aggressive news, meaning real coverage in the United States of both parties not wanting to count votes but count ballots for this election. We're running an advertisement that we're ungovernable. Ungovernable. And you also, on top of that, you have a solar eclipse and you have the planet Pluto in a position impacting the United States. And the last two times you saw the planet Pluto in this position was the French Revolution and the American Revolution. Basically, you know, maybe every 250 years, you see this formation with Pluto. So we're going to have a revolution. We're already having it. And Mr. Market is delivering the message. And this is what, there's many very old school things about this market. One of the most important things is the legacy financial markets, say what you will about them, they're the ones who are going to check the politicians. The politicians are like, oh, our behavior is unacceptable. Oh, we're spending too much money. Oh, the stock market's down, the bond market's crashing. Ruh-roh, we better do something. Even though the current president is, you know, has got, let's just say he's got cognitive problems, Jerome Powell's going to pick up the phone and call his office, and whoever is running the show there, let me tell you something. They're going to do whatever Powell tells them to do, but we're not there yet. Because believe it or not, Powell is actually happy with this price action because the bond market has finally woken up and is going to control inflation. Okay, Megan hitting here with a super chat, which I deeply appreciate, telling one that I'm a hidden gem and that the amount of followers doesn't always equate to the quality of content. You're the best. No, Megan, you are the best. Thank you for your viewership. And that goes for everybody on the show, right? And it is kind of funny, as an aside. My last stream did pretty good, right? It was like, you know, does Bitcoin destroy fiat? And it was ironic that I did see a major influencer use almost the exact same title, right? So, you know, maybe I'm the influencer that the influencers are watching. That's okay, right? I'm over myself on the number of followers I have. Because let's face it, folks, this could be the biggest move in the history of markets. We will talk more about it, right? Joseph Green, good morning from Brazil. Okay. Okay. So, you know, Israel wants to know, you know, what are the events that happen in the market where we can capitalize on this? Let me give you the short version. You know, I still think you can be short bank stocks. Okay. I still think the Dow Jones Industrial Average, along, frankly, with QQQ, but more so like anything that's not allegedly AI based is in serious trouble, right? Oil cracked. Everything is cracking one by one. And this stock narrative that AI justifies wildly ridiculous valuations, ridiculous. Okay, but we're gonna get into all of that. We're gonna get into all that. The United States as ungovernable. Now, Ray Dalio says this is the head of Bridgewater's hedge fund. Bridgewater is the #1 hedge fund in the world. Certainly over the last couple of months, they have just been unstoppable last couple of years with like 40% return. So not only did Ray put an article out, like every time Ray puts an article out, the market collapses. I mean, the guy knows what's going to happen. He knows when it's going to happen. And he kind of warns everybody and kind of shows off and flexes the psychic muscle. So 4 or 5 days ago, before the total collapse of the bond market, he put out something that said cash is king. Now he's got a follow-up tweet that says, my comments over the last month regarding cash now being good have gotten some attention. Yeah. No duh, right? Because everything is crashing, and promoted people to ask why I changed my mind from my early 2020 stance. Well, cash is trash. Well, people, when they print $14 trillion, inflation is defined as too many dollars chasing too few goods or too few assets. So in 2020, cash was trash because they printed $14 trillion across all central banks. Okay, so Ray was long and everyone was selling, and now everyone is long. Portfolio managers under 40 don't know what's going on, and Ray has moved to cash, which is a nice way of saying that he is short everything you own, as in the system. The answer is sometimes cash is good and sometimes cash is bad, depending on economic and market conditions. Yeah, especially if you have a crash, keeping in mind this solar eclipse and related formations are last seen in 1929 and 1987, per work by a guy who wrote a book called The Spiral Calendar. I share a simple way to assess whether or not bonds and cash are attractive to investors. Please read this link as I laugh as your assets melt down. Love hedge fund guys. I know Ray's trying to be nice here, but make no mistake about it. Ray is giga short everything. And you know what? That might actually include the dollar, because the reason this is the halftime in a crash of all time is because we have not seen which fiat currency totally blows up. I think there's just as good of a likelihood of a dollar down move, possibly sending Bitcoin to a friend of mine's target at 30K in the short term. We'll go over that. Okay, everyone's talking about $100 oil. I was talking about $100 oil, and the trading group and emerging asset group was like, hey, we're going the other way. I was talking to a trader, I don't know, literally the top of the market, who says, I'm putting on a big oil short, right? And then I showed him a DeMark chart of oil futures with a giant 13 top on a long-term chart. And guess what? Oil crashes to $85. Our guys are on it. EAG has an internal trading unit that fuels the token. More on that later. Okay, so Republicans are trying to find a new Speaker of the House after the recent clown show. One of the reasons why I think somebody would actually want to be Speaker of the House is because they're going to get the distinction of having to do the emergency spending cuts and kind of looking tough, like they know what they're doing. Now, again, if they can't elect the Speaker of the House, or if they do elect the leader of the legislature of Congress with the mandate of not getting along with the other party, I don't see how that helps treasuries or the dollar. In other words, normally you put a guy in office who can get deals done, who can like make something happen, right? Well, if we're putting a guy in office to not do a deal, right, to, you know, not have some sort of orderly unwind of whatever we're doing in Ukraine, I don't know. I mean, it's not a governable country. You know, the race to fix the election is out. We don't know who the Speaker of the House is going to be, and the President of the United States has got cognitive problems. Just keep selling. Just keep selling. Okay. Okay. The EU estimates that, you know, the Ukraine is entitled to $186 billion. Okay. After it joins the Union. Okay. Well, that assumes that the entire Russian army is not occupying, you know, half the country. My comment about the Ukraine war is George Friedman said it best. The war is actually over. Everybody lost. We lost, the Ukrainians lost, and the Russians lost. Everyone lost. It's just a question of how much time does it take to admit it. Now, that said, expect Putin to capitalize on this situation. Cyber attacks, God knows what. When you have these crashes and you start showing weakness, it's like the United States is like a three-legged zebra, and the crocodiles are circling. I mean, this is not over. Now, Treasury yields fall back from a 16-year high after a weak U.S. jobs data. Okay, so let's talk about the bond market. And the best thing to say about the bond market is everyone is now talking about the bond market. Like we were like, the bond market, the bond market, the bond market, the bond market. Nothing survives Thanos is what I call it from the Avengers. That when the bond market starts wrecking everything, everything gets wrecked. Ironically, crypto was not included in that, thank God. which is one of the reasons why a couple days ago I decided to follow my boss at EAG, who is our chief trader, by the way. More on that soon. Where he was like, you know what? I think there's going to be like a detachment from crypto and legacy because the situation in legacy is so dire. It's right out of Satoshi's playbook. Now, back to bonds. Bonds, everyone's talking about them. Bonds may actually take a break from crashing because now it may be the equity market's turn, right? One of the things you have in a crash is you rotate, right? Bonds crash. Everyone talks about bonds. Then when everyone's talking about bonds, stocks crash. Then when everyone's talking about the stock crash, the dollar crashes. Okay. Then Bitcoin rallies, and then maybe Bitcoin goes down because here's a hint of what I'm guessing in Bitcoin, right? Let's say you were BlackRock and you had to buy an absurd amount of Bitcoin, like huge. What would you do? Well, here's what I would do. And this is sort of a hint as to later. What I would do is I would start to bid Bitcoin up. I'd start to buy it now. Not all of it, but I'd start to buy it now. Then when it's at 30K, I got this from CMO, right? When everybody's at 30K and everyone's like decrying Bitcoin has permanently decoupled and legacy will burn, then what happens is you have the giga crash when all the astrology events sort of come together between the 10th and the 18th of October. Then what you do is you take the Bitcoin you bought at 27 and you start dumping it. And you start shorting it, trying to press it lower and try to find every single stop. Because if you got Bitcoin, you got a stock market crash, a bond market crash, you might as well try to leverage that to try to get everyone to puke Bitcoin, I don't know, to 20 or lower. Try to leverage the crash. Chinese character for crisis is a combination of the characters for danger and opportunity. You put them together. The opportunity for the BlackRocks of the world is going to be to try to buy Bitcoin at an absurdly low price by pressing it lower while legacy crashes, while that crash comes to a peak. For anybody who watches American football, like during the third and fourth quarters of the crash. So that's a hint at the possible Bitcoin roadmap. I like this. Okay. How to look rich. Dress code tips on how to look like a millionaire. Stealth wealth. This is what we're writing about in the middle of the biggest crash of all time. The biggest crash of all time gets bigger when we stop writing about this stuff, even though it's the style page. Now, back to QQQ. Spotify pushes into audiobooks in a challenge to Amazon. Amazon challenges Meta. Meta challenges ChatGPT. Everybody challenges everybody. And guess what? There's a very famous saying about economics, about profits from AI, right? Or profits in general, right? Profits are like gravy in the kitchen. It's a Southern American term. The more gravy in the kitchen, the more dogs at the door. Okay, these guys are going to compete with each other. This includes NVIDIA. This includes chips. This includes all these tech stocks that are allegedly invincible and safe. Guess what? They're not. They're not. And when one person is trying to eat the other person's lunch, it's going to spiral. It's going to spiral. Not to mention the fact that whatever U.S. retailers are going to have to do, more on that carnage later. Chief executives really need to lengthen their attention spans. Their horizons are often shorter than the shareholders that they work for. Now, why is this relevant? This is relevant because I have some serious concerns about what is going to happen on the U.S. jobs front if you have a stock market crash. If you have a stock market down 15 to 20%, chief executives may start issuing orders to sell, just lay off 10,000 people. Just have the managers tell you who the star employees are, and then fire the managers, and then, fire the bottom 5 choices. That's what Musk did. And that's what these guys are going to do. So the fact that they're myopic, the fact that this crash is going to catch them off guard. It's halftime of the crash because you're watching the market update. These guys are not watching the market update, although I'm sure everybody's spider sense is tingling. Point is, these guys could let a lot of people go really quickly. Now, back to this. President of the United States calls on Western leaders, to sort of assure that we're going to be sending ammo over to whoever is fighting the Russians, whether that's our guys or them. I don't actually know. No one really does. Okay. It's a war that everyone has lost. The question is, does that war come home to roost? We had this humiliating exit from Afghanistan because we basically quit on the process. We pulled out all our troops. Taliban took the country one city at a time, and then the capital falls. If you think Putin is not going to capitalize, or the Chinese, on the fact that our government bond market is collapsing, because again, they've sold treasuries, the Chinese have sold treasuries, everybody is getting out of our bonds. So if our bonds spiral out of control and Putin was ever going to hit us with anything, or any nefarious actor was going to hit us with anything, it would be now. That's why this is the halftime of a crash. At the halftime of the crash in 2001 off the .com, you had accounting fraud at Enron and 9/11. Right? So I'm not trying to be like absurdly grim, but I am saying that this is a spiral, right? In other words, I had my book out. I don't have it right now. My 1929 crash book, like a month ago, and people probably thought I was out of my mind. It is happening. So 401ks, things like that, take Ray Dalio's advice. You have to take losses, take the losses. This is going to get ridiculous, right? In other words, one of the things that people don't realize, right, is that even if you know what's coming, it's still going to scare you. It's still going to be a nightmare. You will be afraid. I'm not trying to say that because I want to ruin your morning. I'm trying to say that so when it happens, you're like, oh, yeah, I heard about this on Bill's show, and you'll be less upset and you'll be able to make better decisions, which will be key for crypto. Now, I think the picture is better than the headline. Washington infighting puts U.S. support for war in doubt. Uh-oh. The deep state's got 2 problems. One, they've got a revolt on their hands because, people have just finally got fed up. There was a story I saw on TikTok about a guy in Costco comparing what he was buying at Costco to what he was paying a year ago. And he said food inflation is really at 75%, not 7%, keeping in mind that war is inherently inflationary. So how do you stop a 75% inflation rate? Well, it's very simple. Long-term bond yields rise, long-term bond prices fall, and it takes down equities because rich people borrow money against stocks to pay any price for what they want. And these 2 characters here, they're like, uh-oh. And there's going to be a lot more uh-oh going on. Okay? Because these guys are not going to be able to do whatever they want. Not because the House of Representatives check them, but because Mr. Market is going to check them. Okay. U.S. shale bosses vowed to hold back drilling despite the rising oil price. Producers say the war on fossil fuels and Wall Street's insistence on capital discipline limit expansion. You know what, folks? Again, Mr. Market's going to teach everybody, right? He's going to teach everybody. If you have oil cannot be at $85 and have inflation under control. You want inflation under control, oil has to be at $35. So at any point we want to start drilling oil or whatever it is we have to do, don't worry, Mr. Market's going to teach everybody. In the meantime, oil is probably in the process of a major unwind, and a crash in oil was a hallmark of what started 2008. People have forgotten about this. They're like, oh, look, oil's down. Yeah, oil's down. As soon as I saw oil go down, I'm like, oh my God, bad. But I think one of the reasons why oil went down was because the dollar was too strong. There is a relationship between commodities and the dollar, right? You know, commodities up, dollar down. Dollar was too strong. DXY is unsustainable at 107. Unsustainable. It will not historically. It has sat up there for a period of months or quarters, but really since 1989, the dollar has never really been able to sustain itself above where it is right now. Okay. What will happen if the U.S. stops funding Ukraine? Nothing good. Okay. Russia and China will achieve their goal of splitting the West, and these guys have not considered what could happen in markets. Meta spends $180 million to get out of commercial real estate deals. They spent more than that to get out of commercial real estate all over the globe. It's looking pretty smart because, again, the commercial real estate crash is coming. I like this. Goldman is cautious on expensive India stocks before polls and an election. You know what, folks? Nothing is safe. Nothing is safe. Now, Apple talking about considering something called DuckDuckGo from Google. You've heard that the Apple CEO sold like $87 million worth of personal stock, right? He's like, you know what? Apple, which sells boring technology products that people are addicted to, is worth more than the entire crypto market by a long shot. It's worth $3 trillion. Apple is worth $3 trillion because people think they're safe in Apple and they've parked their money there. There is nowhere to go with this crash. Nowhere. Which gives short sellers the opportunity to short whatever's basically not down or is cracking, like bank stocks. So people who think that they're safe in Apple, yeah, cosmically, big picture, probably. But this is going to touch everybody, right? Everybody. I like this. Ozempic is making people buy less food. So everybody's now on a diabetic drug. It sucks. I can't take it. I'm allergic to it. So if you take this drug, you're not hungry and you buy less food. So demand for the drug is exploding, and I'm sure people are just more than happy to stop their parabolic grocery bill because food inflation is an underreported phenomenon because of the war, because of drought, right? Emerging Asset Group is also still in the water business with a water token launch coming probably in the very near future. More on America as ungovernable. Women are asking for promotion. Men keep getting them. Okay. Certain demographics are strongly favored for hiring, yet when they get to work, I guess they're still preferring the traditional demographic. Again, all we do is fight with each other. We are trying to argue with each other about who should go to what bathroom while our enemies circle around us and our markets collapse. This BS, and all the odd politics around it, my prediction is this will disappear after the crash. Okay, this whole like, I'm on the far left, I'm on the far right. Okay, you have fun with that. It's going to be time for crypto. That's what it's going to be time for. It's going to be time for crypto, not divisive fighting with each other. Okay, high electric vehicle costs are driving buyers to hybrids. What? You mean it's cheaper to use a gasoline vehicle? What? You mean in order to power electric vehicles like in Europe, they have to build giant coal power plants and rip up the earth to get the lithium for the batteries? Huh? Electric vehicles are a scam. It's a scam. Absolute scam. I mean, yeah, I know Elon, Tesla, and all that. I get it. Building electric cars is a good thing, but this whole thing where they want to force you into electric cars is just them trying to take your freedom away. Now, Barclays says only a stock market crash can rescue the bond market. Okay. The Fed will remain a net seller of treasuries. Okay. And Japanese investors may favor domestic bonds as yields rise. In other words, there's no buyer for our bond market. And I saw something yesterday, kind of a conspiracy thing, that the Fed is tightening so hard, is contracting money supply so hard, which is why you have to be careful in crypto, right? You have to be careful that you don't have this like up, down, up, or this like, sudden lurch lower, even if it's a small lurch, right? Because they're going to try to buy your Bitcoin. The Fed is engineering what's going on here. Now, sometimes I get worried that this all does look like some sort of engineered crash of everything, because the real objective of the deep state is to suspend the Constitution. That's the kind of disorder that you could have here. Meanwhile, on the NFT front, OpenSea is trying to make it easier to mint NFTs with its no-code hub. It is a little annoying that, especially with a friend of mine being an artist, of what, that you really have to have a coder in order to mint a project, really. You can stick stuff up in a wallet, but it'd be nice to bring the art market back. It really would. And I love this. So meanwhile, in crypto, as the entire world changes in favor of crypto, what are we writing about? U.S. crypto legislation could stall amid Republican leadership drama. This is what we're writing about? This I love. TV's Kevin O'Leary says all the crypto cowboys are going to be gone soon. Okay, everyone writing about like the SBF trial. SBF lost $500,000 every day after Alameda launched. Right. I mean, let's write about what happened last year. Okay. Sam Bankman-Fried trial invoked Dogecoin and Solana on day one, but not the FTT token. What are we talking about in crypto? What are we talking about? This is what we should be talking about, is that Ripple wins a court fight as judge rejects SEC appeal. Gensler cannot stop crypto. They cannot. Now, one more word about politics, if I can get to it. Look at this. Green Party presidential candidate Dr. West has denounced what he calls the crypto fascist elements of the Democratic Party. So the left is after the left over crypto. Can you believe it? Okay. And breaking news here, which feeds into some of the charts that we're going to talk about. Credit card borrowers with a credit score between 300 and 600 experienced an 8.9% delinquency rate of 30 to 60 days in July, up from 8% a year earlier. Can you imagine what the credit card delinquencies are going to look like if there's an unemployment problem? In other words, we're going to have an 8% 30-year mortgage rates. You're paying 30, 40% on a credit card. Excuse me, but blank you. Blank you. Right? You can restructure this, or I'm just going to walk away. Gen Z has already done it, right? So that leads us into what we're going to do, because there's a couple things that are going to happen here. So let's review. At the halftime of the greatest crash of all time, we have, okay, yields spiraling higher, may take a break, only because stocks have to crash. Banks, credit card stocks, some of this stuff could go to zero. You had Silicon Valley Bank and all these banks failing. Yeah, that was not during a crash. And do you seriously going to tell me that the interest rate risk management, that Silicon Valley and places like that were not able to manage rate risk properly because the Fed tightened so fast? What are people going to do when this bond market is crashing? Like, you think everyone's got this bond market like peachy keen under control? Bank of America, all these places, really? Or how about the central banks? That's why it's halftime. And that's why crypto is not down. That's really what we're here to talk about, right? Crypto is not down. Why? Because it's the halftime of like a mega crash. This is like the entire system is getting an enema that's probably 10 years overdue. 10 years. Okay, we're going to be doing everything through live TA today. All right, emerging asset group. What is emerging asset group? We're going to start with this little chart. Okay, this is the 15-minute chart of my group's or company's new token. Now, what does emerging asset group do? Okay, the new EAG token replacing Gold Retriever is going to be based on, I don't know, it's going to have two angles as I understand it. One, it's going to have a human trading group. So the title of the stream is How to Play Crash, right? How do you play Crash? Well, perhaps you can get money with somebody who can play the crash and the associated reversals in crypto. So we have a human trading group, guys trading currencies, bonds, stocks, crypto. And basically what happens with EAG, the token, is as the traders make money, they take the trading profits and use that to help consume the token. So the better our guys do at getting on the moves, or the bigger the moves there are in the market, the higher EAG can go. So everyone's like, I'm talking to people, like, hey, man, you better adjust the 401k. And they're like, hey, what do I adjust it to? That's a good question. That's a good question. Where is a place to hide? Now, EAG is not a hedge fund in the traditional sense, so I just want to make sure that that's clear. However, the term hedge fund came from the idea that big pension funds and mutual funds used to put money with groups like this, right, that at the time were much smaller, but you'd invest inside of a fund where traders could use, humans, quantitative systems, AI, both, whatever, so that if their mutual funds and their stocks went down, the hedge funds would be able to take advantage of the move, particularly a down move. And given that this is the biggest crash of all time, and I don't know who is going to wind up being safe from this move, except maybe Bitcoin when it's over, but it's probably going to pay Bitcoin a visit too. Our guys can do it. How do I know? Well, because I work with them, right? We do a Twitter space every Monday. Me and my boss, we do like the market update raw, right? Plus is an internal trading unit that, they consume my research, but you know what? Frankly, these guys are so smart. They don't necessarily need my research. And I know they watch the market update, but these guys have their own system because they were trained by my boss on how to trade. So it's like we've rediscovered our core competency. The water company, which has all kinds of catalysts, is going to be a new separate token versus ETH. This token to replace GLDN is pretty simple. Now, a lot of guys, a lot of people out there, I know a couple of companies that are trying to do these like automated quantitative strategies. They're trying to do the same thing. Like if the market goes up, the quantitative strategy will buy tokens and, you just buy one token and it automatically tracks the market for you. Okay. A lot of that stuff hasn't worked. And if it does, it only works in up markets, not in down markets. These guys can work in both markets, particularly down markets. So if you got a token that's been launched, right, and is above the 62% retracement, okay, at 19 cents, 19 and a half cents, I don't know, man. You got a shot at this, because who's going to get on this crash? Somebody's going to benefit. I think it's us, because we're already on it. I mean, my boss was all over this credit card thing way in advance of everybody else. I mean, way in advance. I was like, wow, you're going to short credit card banks, right? We had the idea about shorting things like Nike, Target. Our guys are on it. They're on it. So now you can get on it with this new token being out there. So again, it's not investment advice, okay? But there's another component to this. So here's the EAG fund, okay? And then there's EAG Labs. So this is an inventive, outside-the-box way of doing venture capital without the venture capitalists, okay? So people in the community that own the token can submit their ideas. They get approved, right? And then the revenue goes into EAG, and any rewards from the sort of startup style investment go back to the top token holders, the people who made the idea, and it also gives people inside the community the ability to invest more money in a project that they like or that they came up with. So if the fund only has a certain amount of money to go into a project, you want to add money to that project, you can do that, right? If 3 Hours Capital has a project, you know, how as a retail investor can you get in on any innovation, which includes launching new commodity tokens, which we still want to do. So this is all a part of the EAG universe. How to get on a crash? It's Bitcoin after the convulsion and EAG. Now, let's talk about crypto. Okay, first of all, let's see who's in the chat. Okay, somebody is saying do not buy new tokens. All right, well, just make sure that you're buying the right new token, EAG.network, and make sure you're in our Telegram group talking to the correct Nicole, okay, about our token. Now, one news article that is coming out, and I think this is going to be very relevant for limiting the decline in Bitcoin, is that, you know, pro-Bitcoin a pro-Bitcoin guy is a temporary Speaker of the House. Okay. Kim Craig wants to know, is EAG using AI? Not right now. I mean, obviously, as an analyst, I do. All right. But there is not necessarily a secret gizmo behind what we do. Now, you can say that's a knock. Maybe. Obviously, we're going to be using AI, particularly ChatGPT, as I go research everything that goes on in legacy markets as it relates to this mega crash. Stuff like this that you see like once every 80 years requires the human element, because one of the things that can make a crash, a big crash, and this happened in 87, is that the computer models break. So obviously we're going to use AI, but it's not a mechanized unit, which is why launching this thing in the middle of a crash, okay, so launching a restructured token in the middle of a crash is a good idea. Okay, so let's talk about the crash. This is a head and shoulders top in S&P futures, right? Now, this is where you have to be a little bit careful with Bitcoin, right? I mean, if this formation, a head and shoulders top, is 3 attempts to go up and it fails, right? Like, take it up, the bulls have the advantage. Okay, and this time we're going to make a new high, and we're going to run the bears out of town, and then the bears slap them. I'm like, no. And then the bulls go, uh-oh, that was 3 attempts, and now we got to give up. And clearly this is broken the neckline, come back up, and is now coming off. Downside target is something like, you know, 4,000 for S&P futures, which is about a 5% decline. So most likely what you're going to have is, in order to accelerate this whole 1929 scenario, to make a very long story very short, you need a limit down day in S&P futures. And you're probably going to get it. You're probably going to get it. All right, so that is the next trade. Okay, now this is the 55-day moving average in oil. Okay, interesting how oil got to a hidden pivot target, okay, at 95.38 and failed. Right, this is the power of hidden pivot work. Okay, now it's below the 55-day moving average, and this could just get totally hammered. Right, in other words, this is telling you that, you know, the U.S. or any economy could just come unglued, particularly China. Okay, let's just take a look at the dollar. Okay, I wanted to show you the quarterly chart of the dollar. Okay, so this is a quarterly chart. This is April 1989. I started in the market in August of 1990. The dollar has never, there's a period of years here. It's a quarterly chart. Dollar has never really been able to sustain itself above 106. Okay. There's going to be mega problems in Japan. I'm not going to go into that today, but that's the fourth quarter of the crash. Like, the United States is going to go, and then Japan's going to go, and then Bitcoin is going to go as in up. As in up. And if you look at the Williams oscillator in the dollar, there is going to be a big move in the dollar because the Williams oscillator is very close to zero. So just to be clear, just to be intellectually honest, you know, you could have a situation here where everyone panics and buys the dollar because everything else falls apart, right? The ECB, all of these countries, right, have got such serious problems that people may prefer the dollar, which is what they normally prefer in a crisis. Now, if that happens to be the case, the dollar will go up, Bitcoin will go down, but that will be the life-changing opportunity to buy Bitcoin, no matter how scary it is. Somebody sent 14,000 Bitcoin to Kraken 2 days ago. Ooh, you know who that is? That's somebody who wants to scare everybody and push it down so they can buy. So I'm not saying abandon risk management in crypto, but I am saying Web3 is underpriced relative to AI, and the crypto dip, the mother of all crypto dips, may be on the horizon. It may go up first, but you're going to have a dip because I don't think anything is going to escape whatever's going to happen in the middle of the month, because that's when all the GAN and all the astrology and all that stuff comes together. Okay, ETH. Want to like ETH, but there's 3 red candles in a row. ETH is holding. That's good. It's not crashing. Okay, but, you know, this DeMark automated moving average acted as resistance. You had this big false breakout. Okay, I don't think there's any big hurry. There's no big hurry to get like long-term, long crypto at this point. Short-term, you know, ETH has probably got 1 or 2 more bars this morning before it can probably try to rally. Crypto's probably going to try to rally one more time before QQQ blows up, which is what's next. Okay, Bitcoin's got resistance at 27,850. I can't wait for the day where we can stop dissecting this minutia in the range in Bitcoin. However, this resistance level is serious because it went up here and they rejected it, right? We could also have a situation where in Bitcoin, it's this simple, right? This recent rally is the start of a new trend. And then you have A down, B up, C down. Okay, you go up and then you go A, B, C. And that's where you buy. Halftime of a crash. Halftime, right? This is not over. Now, speaking of not over, this is the long bond futures contract, okay, which, as you can see, is completely falling out of bed. Okay, recently, the breakdown actually just started with a move below 116. Okay. Long bonds, in my opinion, could go from 116 to 97. That's how deep it can go. Like, this is the daily chart of the long bond interest rate. So this interest rates help determine 30-year mortgage rates. And I think one of the more underreported things that's going on out there in the market is that there's this like giant triangle that this has recently broke out of. And this could be a flag and a flagpole, right? Now, of course, this is all over CNBC, so bonds may take a break as stocks fall apart. Well, maybe not. So this is the flagpole. And this is, of course, the flag. And the saying is, flags fly at half mast, which means, you know, you'll have this move, okay? And then you'll have another move that's the same size. So when you see everybody on television going, oh my God, it's all over in bonds, it probably is. Okay. There was a post by the guy that runs PIMCO, okay, Mohammed El Arian, and he told a story. He told a story about in 2012, Austria issued a 100-year bond. A 100-year bond at a yield of 0.85%, which at the time was like, oh God, you know, rates are at zero. Someone's giving me 0.85%. How exciting is that? Whoever issued that bond is laughing all the way to the bank. They have money for 100 years at less than 1%. I understand from that post from El Arian that that bond has lost 2/3 of its value. 2/3 of its value. The lesson that he's trying to teach is when you have interest rates rise on long-term bonds, it is very destructive. I'm looking at this right now. This is October 5th, 9 a.m. Eastern. Bonds ZB, they're still down. They can't even rally. So these Barclays guys, I mean, this is like following a very simple moving average, like a 50-period moving average on an 89-minute chart. There's no bid for bonds. None. Right? And this is what created the crash in 87. People don't realize this. Greenspan came out following Greenspan, the new Fed chairman, taking over for Paul Volcker, wanted to show how tough he was against inflation. And he was jamming rates higher. Okay, that caused a crash in bonds, and that in turn caused a crash in stocks. In this case, you have this wicked thing where the Fed is totally happy to wipe out risk assets. This is the other thing people don't understand about this crash. Let me pull up a different chart to talk to. You know who's happy about this crash? The Fed. The Fed is happy about this crash because the Fed is sick of QQQ. This is the technology stock index where supposedly everything is fine, and it's not. Let me tell you why, right? First of all, everybody borrows money against tech stocks. Everybody who works for tech companies goes out and spends money. Everybody thinks everything is fine. Everybody goes to Costco and is more than willing to pay whatever price there is for groceries. Meanwhile, they think they're safe in this, and Jerome Powell's tired of it. I would be. Everyone's like, oh, Jerome, you're not doing your job. I was like, okay, really? Well, you know what? I'm going to let the bond market do the job. I mean, now, what they're probably not happy about is how scary this is because there's no liquidity in treasuries. Like, we don't know where the bottom is in our bonds. We don't know where the bottom is. So, like, yeah, they're going to get inflation under control, but at what price? Now, let's talk about QQQ, right? I can't, like, are you telling me that this whole AI thing is bigger than Bitcoin? It's bigger than money. AI is more important than money. So you can have Bitcoin going down or doing nothing with this going up, up, up. You have a double top. You have a 9 bottom here. Okay. But the thing about a 9 bottom is if you get a failed rally after a 9 bottom, you can get an extended trend. So this is a daily chart. And if QQQ can't get itself back above 358, in other words, if this candle and this candle are both failed rallies in QQQ, this is going down for 2 weeks. 2 weeks. And it's going down hard. Why? Because everybody thinks they're safe. Everyone thinks this is fine. In 1929, it was Standard Oil. Everyone's like, oh, yeah, oil company's fine. Don't worry about it. Somebody tried to buy Standard Oil and tried to pin its price in a certain level, right? Rockefeller did this to try to restore confidence in the market. Yeah, forget about it. Lightning is out of the bottle. You cannot keep market forces at bay. You cannot print $14 trillion in 2020 and produce nothing. Inflation is too many dollars chasing too few goods. They printed $14 trillion and the world was closed. So how does that not result in catastrophic inflation? And how does it not take this down? The thing that people do not understand about this is that the Fed wants this down. So I'm sure they're scared out of their mind, right? I'm sure they're scared out of their mind. But you know what? Part of them is like, you know what? Good. Good. Serves them right. There's your trend line in QQQ. You do not need to be a professional technical analyst to know that QQQ is at an epic inflection point. It has broken this trend line. It has slammed up against it twice. And now there's nobody home. Nobody. Nobody. Let's just look at the weekly chart just for laughs. Oh, look. There's the giant 13 top. Whoop. Lost it. The giant 13 top. This crash now moves to equities, which, again, could have a larger impact on crypto. It could. Okay, let's go to crypto. Let's talk more about it. All right, Jazz Gill from Australia. Little late evening action from my friends overseas. Okay, let's go back. Let's go back to crypto and Bitcoin. Okay. Now, this is a 90-minute chart of Bitcoin. And it's kind of ironic that the range in this is pretty clear if you look at the DeMark work, right? 27.2 is the high end of the range. 26.7 is the low end of the range. You probably wind up seeing the low end of the range. Okay. The real question is not with crypto is where do you buy? It's not where do you sell, but it's where do you buy? Okay. 25.5 is another level. Now, in the event of some kind of calamity in crypto, which we have to at least acknowledge that that's possible, let's try to come up with, like, literally right now on the fly, where would you buy Bitcoin? Like if the world ended, where would it go? Okay. So here's the death cross in Bitcoin. I don't have the other moving average shown here, but there's a allegedly bearish pattern in Bitcoin that so far is not working. Now let's just draw the hidden pivot analysis and say, what's the worst case scenario in Bitcoin? Well, if you do the hidden pivot analysis, a move below 26.6 could trigger a move to 21. And honestly, with the way this is working, if there's a stock crash and they're going to try to push it down, that would be, I would think, the max that they could push it down to. Some people have work showing like a bigger decline is possible. If there is a bigger decline, it'll be a flash event. Ironically, ETH is actually closer to support at 1496. Okay. Crypto is to be accumulated. Okay. Let's sum this up. Aiken is here. What was the signature sign that the crash of 2008 has recovered, and how long did it take Wall Street and Main Street to experience relief? Oh my God, what a great question this is. So let's talk about crashes and aftermaths. So in 2008, okay, the consumer impact was that banks just decided that they weren't loaning anybody money. So if you had a credit card with a $10,000 limit, you got a letter in the mail that says if you hadn't used the limit, it was like your limit's now $5,000. So that's it. And then, of course, there was mass unemployment there, right? You know, you had a lot of white-collar workers just getting indiscriminately laid off, and Wall Street did nothing but lay people off for 10 years. I know it was there. You know, I survived 8 cost cuts at Goldman, and they finally got me in 2016. Okay. So it was a relentless contraction in both the financial sector, banks. Now, it took housing. Commercial real estate actually came back quicker, mainly because everybody was like, oh, commercial real estate's going to blow up, and it really never did. In this case, I don't think that's going to be true. There's a China shoe that's going to drop here. We don't even have enough time to cover these things. But in 2008, the problem was everybody was underemployed for years. If you lost your job, you couldn't get another one. Now, this labor market is a little bit different. Okay. I think the thing that's going to be different about this is that in 2008, it was the big banks that failed. In this market, it's going to be the little banks. Discover, Capital One, Ally, all the people who issue these store credit cards. 2008 also left a mark, right, in the sense that central banks panicked. Central banks in Bernanke started doing QE. Nobody understood what that was. Now, of course, we understand it as indiscriminate printing money, but 2008 freaked them out so bad that they did emergency money printing, and then they never stopped doing it. Just like we can never have this, we can never have the stock market go down again, ever. So we're just going to keep printing. I mean, Bernanke came out at Jackson Hole, Wyoming, and just said one day, this is like 3 years later, we're doing permanent QE. We're doing permanent QE. They were stimulating a housing market that didn't need to be stimulated by buying mortgage-backed securities. So what I call the knife experience, right? You know, is they got stabbed, you know, they got hurt in 2008, and then they acted, everybody acted like, oh my God, every time something happens, you know, every time the stock market went down 3%, the Fed would print more money. Like, you know, we can't have that again. It left like a permanent mark. Well, okay. So now we fed the market sugar for 12 years, and now we're going on a diet of chicken and broccoli, and the market's not going to like it, right? Again, you know, bond yields go up the way they did. How do stocks survive? Meanwhile, we're going to need a whole different monetary system. So the summary, crypto, the solution, right? The United States, ungovernable, right? If you speak out against anybody, you get canceled, erased, demonetized, whatever. It's unbelievable. And there are people speaking out against it still. But I think people are starting to wake up. And this is why people are going to go, oh, yeah, I'm holding crypto and I'm going to self-custody. You know how crypto people are always lecturing people that that's what you have to do? Yeah, that's not going to need to be a lecture when this is over. It's not. Which is why you can't give up on crypto. You have to expect insane volatility in legacy. I mean, you could have a long bond. The yield on a long bond right now is 4.89. You could easily have a yield on a long bond of 6% by the time this is over. And that, I mean, that is a huge move in price, in the price of the bonds. Not to mention, you know, an 8-9% 30-year mortgage rate, Rex housing. You know what I'm saying? I mean, the way I describe this on like the EAG Twitter spaces is that this could be like a seizure, right? Where the market just like the whole system shakes, right? Like it's going to come unglued. Now, one of the things you have to be careful of is not giving in to the fear. So I just went through this whole hour diatribe about crypto, about legacy, about this being halftime of a crash. Don't give in to fear, and don't let that affect your decision-making about crypto. And more importantly, don't let it prevent you from having a happy life. Go to the movies, go out, buy your significant other flowers. Seriously, one of the best things you can do, like in 2008, and it happened after 9/11, is that people went out and did things to like entertain themselves. The musical, the Broadway musical, was invented in the 1930s as a way to distract the public, make them laugh, and give them something funny to do in New York during the Depression. Not only do you need to have a crypto plan, but you need to have a happiness plan, because very scary things are going to happen. So go out to dinner, go to a movie, buy an Xbox. Make sure that you make time to be happy. I'm your host, Bill Noble. This is the halftime report of the crash of 2023. I will see you soon.